We need to talk about Oracle, Nvidia, Iron, Nebius, AMD, and Nvidia. And in this video, we're going to have price targets on some of these as well. But here's what you've got to understand. What I've just mentioned are a list of 3 buckets of companies. There are, and if you don't understand the difference between the 3, you're going to learn in this video. But if you think they're all just AI chips and servers, you're mistaken. Because you've got to understand what drives the revenue at these companies and the bottom line to understand and evaluate them as separate investments. Now, CoreWeave could really be part of this discussion as well, along with Iran and Nebius. We've personally been talking about Iran for quite a while, and it's been in our Meet Kevin channel here for a while now. And look at this. It's been skyrocketing even since we've been talking about it. It just continues to go up. It's up another 9% today. What's also very interesting is just this morning, before the market opened in our Meet Kevin membership, we suggested that a great trade today could be CoreWeave because of the technical analysis we performed. I taught the analysis that I used to make this determination. So it's not like I just throw a dart. Like I said, here's why I think it. And I post it to course members right here. And look at this. I said it could go to 125 by the end of September. But the technical analysis is really bullish in the near term here. And what happens? Literally goes to 125 within an hour of the open. Right to my line within 12 cents of it. So you want to be part of the Meet Kevin membership, make sure you join that. Go to meetkevin.com. You get all the alpha reports in the morning, our trade setups. You get the top 10 stocks to buy for the next 10 years. That's a big one. We've already announced 4 of them, 6 more coming up. We do our analysis on them together as well. You get all the course member live streams, all the course content, the lectures. It could be a tax write-off for you buying the course and the membership. So make sure to join that. Use code BullishCatalyst at meetkevin.com. So with that said, we've got to break down the difference here between Oracle and these other companies. First of all, Oracle. So Oracle is taking on massive amounts of debt. They're taking on $38 billion of debt for data centers this year. Now, the lenders are probably in the long term going to be some bag holders here. JP Morgan, Mitsubishi Financial, although they might end up dividing this up and, issuing bonds for this kind of stuff. So who knows who's going to end up holding the debt. But Oracle is building a massive facility, a data center, not just in Shackleford County, Texas, and in Wisconsin, but they're building twice as many data centers as they currently have. They currently have about 34 data centers, and they expect to get to 71 data centers. This is insane. Oracle is literally taking money anywhere they can get it, from issuing stock to borrowing money to throw it into more data centers. Now, Oracle's earnings actually missed, but their forecast was so bullish that their stock today, being up 38% at the time of this recording, has just made its largest move since 1992, the year that Kevin was born. 90s, baby. But anyway, that means this stock has just generated roughly $300 billion. Where do you think that $300 billion is going to go? That $300 billion is, in my opinion, which is worth about 3 Nikes, not 3 Nike shoes either, 3 Nike companies. That $300 billion is likely to turn into more share issuance and likely to turn into more capex spend. Now, could it all be a bubble? Sure. But we got to talk about where that money is going because it's pretty exciting. Now, understand the Oracle financials a little bit for a moment. Oracle generates money by not only producing data centers, but then licensing that data center space and providing software related to it. It's entirely unclear how much actually comes directly from the server stack and how much comes from the licensing. They do give us a suggestion that it's roughly 50-50, but I actually think that a lot of the licenses for their software are just tied to their infrastructure, which they call cloud services, and they show it as a 50-50 split on their annual reports. But I actually think the vast majority of Oracle's revenue, which we know 86% of it, factually 86% comes from cloud and licenses. But I think the vast majority of that 86% is basically just an ROI on them building data centers. Okay. Understand this for a moment. This is a very different kind of business model than just a pure play SaaS business or like an Nvidia business, okay? So I want you to think of this. Let's say it costs you $100 to build an apple tree. Imagine you can build an apple tree, and it drops $10 a year, assuming the apple tree doesn't die, like the AI bubble pops, right? Okay. If it costs you $100 to build the apple tree, you're like, well, I'm just going to keep building apple trees. That's great, but it costs you a lot of money. So you take on debt and you build, and the revenue you're generating, that increase in revenue you're getting, is coming from your capex expenses, building the trees. So really, the more you spend, the more you make. Okay, this makes sense. What happens when the spending stops? Well, your revenue growth slows. This is a warning for Oracle. It's kind of like with real estate. If you own 0 rental properties and this year you buy 10 rental properties or a 10-unit apartment building, you're going to invest money into that building and your rental revenue will look like it just exploded infinity % because you went from 0 rental revenue to a lot. But that's really just ROI on your capital investment, like building those apple trees or growing the apple trees, whatever, right? That's a very different kind of business model than designing chips, which is what Nvidia does. See, Nvidia doesn't make anything. Nvidia doesn't have to spend money on capital investments. Nvidia spends money on people who design chips, and then Taiwan Semiconductor manufactures the chips. So Nvidia doesn't rely on borrowing money from JP Morgan or Mitsubishi to go, build the trees or build more data centers to increase their revenue. Nvidia just relies on other companies like Oracle doing just that, taking that money and then plowing it into Nvidia chip purchases. How do we know they're doing that? Oh, well, the Financial Times reported at the end of May that Oracle to buy 40 billion of new chips for OpenAI's new US data center. Okay, how much money is Oracle expecting to spend on capex in 25 and 2026? Well, in 25, they're spending roughly, taking a quarter and annualizing it, they're spending about $34 billion. They expect to spend another $36 billion on capex in 26. That means they're spending $70 billion on capital expenditures. That's just Oracle. That's how they're getting their revenue increased, by the way, right? An ROI on these new data centers they're standing up. Well, if they're going to spend $40 billion on Nvidia chips, 40 billion into 70 means about 57% of all of their capex is going straight into Nvidia chips, which is crazy because it means you've only got about 43% left for things like buildings, server racks, super microcomputer racks, Dell racks, CPUs, like maybe AMD CPUs or AMD GPUs, whatever, right? The vast majority is flowing to Nvidia here. Now, we'll talk about AMD versus Nvidia in just a moment, but it is possible that Oracle is a play that benefits from data centers in the long term, assuming the trees don't die, assuming the AI bubble doesn't die. But they're only growing their revenue with these high percentages right now because they're borrowing money, blowing capex, and then recognizing revenue on that. That revenue growth isn't sustainable because at some point they're not going to be able to continue to generate those sort of revenue gains. And as long as you're an investor who realize that, great. Nvidia is a different kind of business. They don't spend money to make money. They let other companies spend money and then they make money. Now, the downside of Nvidia is they have to earn that money every quarter. When they say, or when they sell $40 billion of chips in a quarter, they start the next quarter at 0, right? They have to go sell another $40 billion in chips. It's kind of like Tesla when it sells cars. You sell 1,000 cars next quarter, well, you got to sell another 1,000 Cybertrucks. Otherwise, you're at 0, right? So to grow from 1,000 to 2,000 to double, you have to go make the 1,000 cars again and then get another 1,000. Which is different from a software business. And that's where you have 3 buckets. A software business, which Oracle has some of as well, just like Microsoft and AWS do, is the gold standard for making money. So think about it like this. There are 3 buckets, and there are basically 3 standards, okay? The most expensive bucket, well, let's put it this way. The capex method, that's like, Oracle building the trees in my analogy here, right? Data centers, right? Then you have the start at zero method. This is making chips, cars, right? And then you have the gold standard, SaaS. Okay? With SaaS, because you have annual recurring revenue, you actually start at 100% and you just grow from there unless people are canceling. That's why SaaS gets these crazy valuations. So Oracle is mostly in this pie. They're in the capex pie. It's kind of like house hack with buying houses, except we think houses will go up over the very long term, whereas we can't say that data centers will continue to grow in value over the long term. Just a little injection of house hack there for a moment. However, house hack is also getting into building. We're developing 2 ADUs right now that are almost done. We're going to be building probably 8 to 12 more over the next year. We're also doing a spec build. Starting at zero is sort of like building homes as an analogy, right? The capex method is sort of like buying homes. And then the SaaS method, this is kind of like the AI play. The AI SaaS, which is something HouseHack's doing as well. We're running Blackwell chips right now, training our ML, so that way we can launch our beta in Q4 and hopefully license this in Q1, Q2, because that's infinite. When people get into this and they're like, oh my gosh, you helped me make 50 grand and it cost me 2 grand to you. I could pay you for 25 years and break even. That's a great play. That's what we want to do. It's sort of like the Palantir, but of real estate. We want to be the Palantir of real estate. So the point of this is to help you understand the 3 different buckets. This isn't supposed to be a pitch for HouseHack, just in case the SEC is listening. This is not a solicitation. Read the private placement memorandum, read the offering circular. I'm the CEO, I'm biased, and I'm using this company as an analogy to help you understand Oracle and other businesses, okay? So AI SaaS plays are amazing because it's annual recurring revenue, as long as you're not something stupid like a ChatGPT wrapper, in my opinion, because I think those have limited longevity. I don't know how you're going to keep making money off of that. We'll see. And then you have, making chips, which is what Nvidia does. And then you have the capex method, which is mostly the Oracle. Though Oracle does have some of the SaaS play as well. And understanding those 3 different businesses can help you understand why companies get different valuations, right? So what's so interesting about Oracle is most of their business is renting out these data centers and then throwing in the software with it. The big winner in the near term, in my opinion, massively, is going to be Nvidia. Yes, even over AMD. Now, why? Well, let's analyze that. Everybody's worried about Nvidia not being able to get from zero and selling those chips again. But when Oracle is saying we're going to double our data centers, we probably still have another 2 years in the pipeline of Nvidia cranking these chips. Because companies like, oh my gosh, I literally just now got a headline. OpenAI and Oracle signed $300 billion computing deal, among the biggest in history. That's crazy that as I'm doing my Oracle NVIDIA video, we get this this is a Wall Street, there it is, Wall Street Journal, breaking news. There it is, exclusive. Wow. All right. OpenAI signed a contract to purchase $300 billion in computing power over 5 years from Oracle. Dude, holy crap. Divide that. 5 years. $60 billion, bro. $60 billion. This is why Oracle wants to double their data centers. Because now, OpenAI, the SaaS business, is throwing money at them. So think about this cycle here for a moment. OpenAI right here is the SaaS business. It throws money at the capex business, right? OpenAI throws money at Oracle. And who is going to recognize the biggest amount of money from that right now? Nvidia. It gives you years more of run rate. It just keeps the bubble going longer because Oracle's over here taking on debt to finance the continued expansion. And then it's a cycle right now. It all ends, when companies like OpenAI stop signing contracts and then, Oracle has to issue shares and then the share price goes down and then you can't get any more debt. And then all of a sudden when OpenAI stops sending money to Oracle, then Oracle's like, all right, we don't need to build any more data centers. And then Nvidia's starting at zero is going to suck because you're going to have really big negative growth. But deals like this $300 billion deal, just give you even more run rate at these chip companies. It's insane. It's hard not to be bullish. Now, of course, you could go into a recession and valuations could collapse and everything. We're going to talk about price targets in just a moment. I actually have a price target of $240 on Nvidia. I'll show you that in just a moment. But look at this. OpenAI signed a contract to purchase 300 billion computing power over 5 years from Oracle. People familiar with the matter said. The deal is one of the largest ever signed, reflecting how spending on AI data centers is hitting new highs despite mounting concerns that it's a bubble. It will require 4.5 gigawatts of capacity, roughly 2 Hoover dams. Oh, I did my flight training over the Hoover Dam. Oracle shares surging, blah, blah, blah. Yeah, this is just literally breaking news. Now, I disagree with this. Oracle is the new Nvidia, for better or worse. I don't think so. They're very different business models. Again, you already know this. It's the capex business model. I think the only reason they're running this headline is because of like their euphoria around the stock right now. But they're fundamentally different businesses. So let me show you the fundamentals. Okay. So you can, by the way, get these screenshots. I think it's useful to know this in the Meet Kevin app. So the Meet Kevin app is optimized for iPhone and Android. You could get that at, I think it's meetkevin.com/gapp. Meetkevin.com/app sends you to the Apple App Store. Yes, it does. Meetkevin.com/app sends you to the Apple App Store. And then if you go meetkevin.com/gapp, that should send you to the Android App Store. Yes, it does. There you go. Sends you to the Android App Store. Please leave me a 5-star review. But anyway, if you go to the data tab that we have in the Meet Kevin app, you can actually see this data. So like here, for example, here is the Meet Kevin app. If you don't like the green, that's okay. You could change your color preference. You just go to preferences and change your color preference. I also recommend that you change what you get notifications on, because if you want notifications for Trump videos, great. If you want videos on piloting or life or whatever, you could choose that and customize the notifications you want, which I think is useful. But beyond that, you could also go down here, and when you look at sort of like the analysis, you could click on them and expand, and then you could see my sort of highlighted notes on this, right? Which is kind of cool. I think that's awesome. So, something to check out. Meet Kevin app. Again, that's meetkevin.com/app or meetkevin.com/gapp. Somebody in the chat says 30 billion, not 300 billion. Well, I don't know, man. Maybe you got to put the glasses on, but this to me looks like 300 billion. And it looks like it says multiple times here. It's also on my Refinitiv terminal right here, where I'm getting the newswire. So anyway, okay, let's talk about these numbers. Okay, so we go to the iPad, look at the numbers. Okay, this is Nvidia. Okay, Nvidia has an insane net margin. Nvidia brings 56.5 cents of every dollar they spend to the bottom line. So Househack bought Blackwell chips. We are running Blackwell. 56.5 cents of every dollar we spent on those chips went to Nvidia's bottom line. That's insane to think about how high that net margin is. Now I want you to compare that for a moment to something like Tesla. And this is not to be mean to Tesla. It's just a fact. It's a reality. Okay, because I like Tesla a lot. I love my Tesla. I've loved Tesla since 2017 when I got my X. I love riding my Black X. My Black X was the best ride. The size was perfect. The curves, it was beautiful. But anyway, now I got the Cybertruck. Okay, so Tesla has a net margin of 1549 divided by 22,496, 6.8%. So Nvidia has roughly 10x, a little less than, roughly 10x. Oh, that's not the net income. The net income line is lower. Yeah, it's 10x. Nvidia has 10x the net profit margin of Tesla. So if Nvidia brings 55 cents for every dollar they sell to the bottom line, Tesla brings like 5 cents to the bottom line. And Tesla is worth 1/4 of Nvidia. So put a different way, Nvidia makes 10 times as much money per dollar that they sell, but they're only priced at 4x Tesla. That's an interesting comparison, right? I think that's very valuable to consider. Now, something else to consider is that you've got gross margins, and let's see here. Let me go ahead and pull up the sheets over here because it's going to be a little easier for me to go through these on the computer. So if we look at Nvidia's assets, Nvidia has $40 billion in debt, but they're probably not paying that off because the rates are probably pretty low on that, because they have $57 billion in cash and marketables. If their debt was more expensive, they would just pay off their debt. They could literally pay off their debt and have $17 billion sitting around. On top of having $17 billion sitting around, Nvidia is literally paying $24 billion to repurchase stocks in 6 months. That's, what is that? $12 billion of stock repurchases every 3 months, which is insane. They're immune to the debt bubble, which you can't say about Oracle, right? Oracle has debt. We'll go pull up their balance sheet right now, actually. Oracle, let's go grab their last financial disclosure and get their last quarterly results. Let's go look at their debt just to be able to compare. So Oracle, here you go. So cash, Oracle's got about 10 billion of cash, marketable securities about half, call it about $11 billion of cash. So we have $11 billion of cash. We have debt that needs to be paid of about $27 billion. I'm taking out the deferred revenues, okay? So $27 billion of current debt that needs to be paid. Look at this. This should scare the bejeebers out of you. Long-term debt, not deferred. $115 billion. And they're literally going to borrow another $38 billion of debt to go buy Nvidia chips. Almost 100% of $38 billion of debt is going into Nvidia chips. They're financing almost everything and plowing it into Nvidia chips. So think about it. Oracle holds the debt bag, and they've got that capex, that tree that they're spending money on, but data centers could lose value in the very long term. Nvidia takes all of that debt and turns it into cash flow today. Not only do they turn it into cash flow today, but then they turn around and buy back stock, pushing up the stock value of Nvidia. Now, what does Oracle do? Well, Oracle issues stock. Oracle is literally issuing in the last quarter $1.7 billion of stock, and they're taking on more debt. So they're taking on even more debt. They already owe over $100 billion of debt, and they're issuing stock. Nvidia has essentially no debt relative to the cash and marketables they have, as I've shown you with the numbers. And they're buying back stock at an insane level. So when you compare Oracle and Nvidia, no, Oracle is not the next Nvidia. Nvidia benefits immediately off all the spending that Oracle does, has no debt problem at all, and is buying back stock for days. Oracle is a debt bag holder. And that's what you have to be careful about with CoreWeave as well. Now, remember, this market's slipping a little bit right now. Remember what I said this morning, and I told you about this, that we not only in the course member alpha report over here, but this is when the PPI came out. In our course member live stream this morning, I said, guys, we're at all-time highs in pre-market. This is way too euphoric going into CPI tomorrow. Don't get caught on this. I don't think today is an upside day for the Qs. And I was right. We bled off on the Qs. CoreWeave rocketed, which was our other call. We made 2 calls today. Qs down, CoreWeave up. Both of them nailed it. And you got to be a part of that. You join the Meet Kevin membership. You get lifetime access. You want it in 5 years, you want it in 2 months, whatever. But the price goes up over time. Use coupon code Bullish Catalyst before we raise the price again. That coupon expires soon. I slightly extended it because I thought we'd get some Bullish Catalyst this week. And BBI was actually really bullish. That was a good Bullish Catalyst. We love those Bullish Catalysts.
Bullish Catalyst.
But anyway, now you can start understanding a little bit of the difference between Nvidia and Tesla, for example. But you can also understand a little bit of the difference between Nvidia then and AMD. AMD is a bit of, no offense to stepchildren, but it's a bit of the stepchild of Nvidia. It's just the less favored. They do not have enough cash to pay their debts. They have about, $6-ish billion in cash, not counting receivables. And they have current liabilities of 9.8. Nvidia has plenty of cash and short-term investments to cover their current liabilities and then have an extra 17 billion sitting around. Actually, I think they can pay off all of their debt. Let me look at that again really quickly. I always just like looking at the numbers, because if you look at the numbers, you don't have to remember. Here, assets. Yeah, I've got marketables and cash of 56. I've got current liabilities of 40 bill. Total liabilities of 40 bill. Total. They can pay off all their debts. And then AMD actually has some long-term debts as well. So we don't have enough cash to pay off our debts. And then when we actually look at the cash flow statement at AMD, and I'm not trying to poop on AMD, AMD has a lot of the benefits that AMD does as well. It's just a stepchild. If you look at their cash flows, they do rebuy stock, but they're issuing debt. They net issued $1.5 billion of debt. Now, they use that to rebuy their stock, but they're issuing debt to buy back the stock. Nvidia just makes so much damn money, they don't have to issue debt. They can buy back their stock and not borrow. It's crazy. Nvidia has about 16 times the free cash flow of AMD, and the stock market value of AMD is about 16.5 times that of AMD, which suggests that they're kind of tethered, right? They can kind of move together in valuation because of that difference in cash flow. Now, when it comes to price targets for these, I think this is a worthy conversation here. So the price targets, what I've done is I've done my usual PEG analysis, which is a price to earnings growth analysis of these different companies. And we take what Wall Street assumes, and then we also make sort of meet Kevin adjustments to these. And my take is the following. My take is that right now Nvidia is trading for a PEG ratio of about 1.94. And I think a fair PEG ratio for them would be about 2.67. At 2.67, mind you, Palantir is selling for like a 6. Tesla selling for like a 5. At a 2.67, Nvidia is a $240 stock. So really nice upside on top of where we are on Nvidia. Obviously, hashtag no guarantees, but you're trading for 176 right now. It's up like 3 to 4% on the day. AMD, I took the Wall Street estimates and I adjusted down their growth. That's my opinion. You don't have to adjust down their growth. Wall Street says their growth is going to be 27% on earnings per share. I think it's going to be closer to 20%. With my adjusted down growth, I still have a price target for AMD of $211, rounding a little bit. $211, that's better than where they sit today. They sit at $159 today. So I'm bullish AMD and Nvidia here. Okay. Understanding that Nvidia is trading for 176. 240 divided by 176 puts me at a 36% upside. AMD at 211 divided by 155 puts me at a 36% upside. See how they're tethered? Kind of interesting. That's actually really interesting because those are based off the Kevin valuations. Anyway, Oracle, according to Wall Street, could have a $461 price target. That's based on using my PEG analysis for Oracle. Okay, 461 divided by 220 or 323. 461 divided by 323. That's about a 42% upside, but I don't like it. It's too much debt and it's too capital intensive in an asset that I don't have as much faith in. Like, I have more faith that housing will continue to go up in value over time. I don't know if I can say that for data centers forever. I can say that for data centers for the next 2 years, but can I say it forever? I don't think so. At some point, they'll be a commodity and they'll lose money. You'll have lower utilization or whatever. That means with Oracle, I personally have a personal price target where I'm not saying it's going to go to this, but I don't want to buy Oracle unless it's trading for under $175. That is like halving where it is today. But I wasn't interested in it yesterday, and I know it's going up today, but I'm not interested in it today. So if you're wondering, in the Meet Kevin membership, is Oracle part of the top 10 stocks Kevin's buying for the next 10 years? The answer is a hard no. It is not. Spoiler, it is not. The stocks that are in Meet Kevin's top 10 stocks to buy for the next 10 years, right now, one of them is up today, 8.3%. Another one's up about 1%. Another one's up about 1.5%. And then where's my last one? My last one is up about 2%. All of them are green right now, even though the market's turning red. Let's go. Anyway, this hopefully gives you a bit of an understanding where, like, CoreWeave, Oracle, like, to me, you can lump these together. So let's go back to that sheet right here, and you can lump these. The capex heavy ones right here, this is going to be your Oracle, your IREN, your NBIS, your CoreWeave. Note, Oracle probably makes more off software than the others, but even CoreWeave pitches its software for managing the data usage people license from them. All right. Nvidia is obviously a stronger and has bigger PP, but both have 36% upside from here to a fair value. You know, that's not to overvalued. Even more if they go to overvalued, right? And then as far as the SaaS side, you know, the SaaS side, that's where you have to be careful because it's so played out already, so rich already. Like, you know, Palantir is your perfect SaaS example, right? Snow has a better valuation, but there are other SaaS plays that could do well in a recession as well. One of our top 10 stocks to buy over the next 4 years is a SaaS. Well, it's SaaS and hardware, but the hardware leads to the SaaS. Really shocking business. People who know will know what I just said. And anyway, there are opportunities here. You just have to be careful because so many of them are so rich, and I think there's a risk of real valuation compression in a recession for some of these. I love the SaaS business model. That's what, like, when it comes to SaaS for me, most of the SaaS that I want to hear about is what can we pull off with HouseHack? Because I personally, like, I want to put more of my own personal money into HouseHack even this year, because I look at it as like we're buying HouseHack shares at, you know, $1.40 per share, which is basically just the value of the homes and like a low multiple on top of what, you know, a real estate holding company trades for, which they usually trade for 2x. Book, this is probably trading, you know, at, you know, 1.4, 1.5x book, which I think is a discount. And then that's why I say there's really no valuation premium for the AI that we're building out. And so I'm kind of like, man, if I'm going to get into SaaS, I'd rather go buy HouseHack. No, there's risk, obviously, because what if we suck, right? But I'd rather, like, because of what I'm seeing, I'd rather put money into that than you know, a SaaS at a 6 or 7 peg that I don't think will do well in a recession. Yeah, that's where my head is on all this. So, okay, I just got a notification that Blue Owl is in a secondary offering for another $2.7 billion of money. Now, why does Blue Owl matter? You might not even know what Blue Owl is. Or what Blue Owl is either. Blue Owl is a company that is financing the AI data center expansion for Meta. So $29 billion of debt going to Meta. Blue Owl Capital and Pacific Investment Management, they've been involved with that. UBS is warning about an asset bubble fueled by debt. But this is why, like, I recognize it could all be a bubble, but realize the bubble is coming from debt that companies like CoreWeave and Oracle are holding, and they're squeezing that debt, and what's coming out is cash. And Jensen, where's my jacket? Where's my members only jacket? Basically, think about it like this. Here are the debt people. The debt people are wringing a sponge up here of debt. And then Oracle's like, got a bucket capturing all the debt. And then the debt is overflowing. It's bubbling over. Like, all that money is coming out. And it's just pure profit, basically, that's coming out. And you just have Jensen over here going, shower me in all this cash. Like, he's liable for zero of the debt. He doesn't even make the damn chips. Taiwan Semi does. He just collects the money. It tells you. It's the greatest, largest PP business model ever. And as long as the debt keeps flowing, man, the dollar hollers keep coming to your boys over at Nvidia, and hopefully to your stepbrother, AMD.
Why not advertise these things that you told us here? I feel like nobody else knows about this.
We'll try a little advertising and see how it goes.
Congratulations, man. You have done so much. People love you. People look up to you.
Kevin Paffrath there, financial analyst and YouTuber. Meet Kevin. Always great to get your take.